Sometimes you weren't taxed enough based on the rate that your job was taxing you, because when all of your money accumulates throughout the year, it might raise you certain tax brackets. Now, certain professions can now qualify for up to $12,500 tax deduction on overtime if you're filing single, or $25,000 if you're filing joint. Taxes is our number one biggest expense in life. They deserve to enjoy some of the fruits of their labor.
In 3, 2, 1, we go. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dikimbe Smith, and this week I am joined again by a returning First Sip alumni, my brother, David Colon. Welcome.
Thank you so much. It's always great to speak with you and to be on the show, man. I love what you've done over the years, and I'm excited to see you continue to prosper.
Thank you, brother. And it's funny because last week, I gotta bring up the story, kind of work our way into the main topic of what we're talking about today and how we got here. But man, if people could have seen like a live stream of us trying to figure out the technical difficulties behind just trying to get this podcast set up, going, and everything, that would have been an episode in and of itself.
Yeah.
Because it took us about 45 minutes, an hour to just pretty much say, you know what, we're going to tap out. We're going to try this again next week. Take your trip and we'll come back and we'll regroup.
I'm not going to lie. I felt like how an 80-year-old will feel with a new cell phone or the remote control. I almost started calling my kids. They're only 7 and 5 years old, to say, hey, listen, can you help me work this thing? I mean, I didn't know what I was doing.
I was just about to ask, like, if your parents ever call you and say, like, hey, like, we got this new thing or whatever, can you help us set it up? And you're trying to explain it over the phone, and it's just not connecting. It's just like, okay, I need you to look for this thing over here. Press this button. They're like, what button are you talking about? I don't even know. What do you mean swipe this, swipe that? And that's how we felt.
Exactly.
Oh, man, it was bad. But we made it. We're here.
We're here. We're back again.
Yep.
Everything is right today. So fingers crossed that we have a smooth show.
Yep. Hopefully you're rejuvenated and, got some fresh energy. You were just outside of the country. I saw you drop a video on your Instagram yesterday, actually, about, some of the stuff that you were doing down there business-wise, connecting with the people, getting updated on different tax things down there. So I do want to touch on that a little bit too, later in the episode, because there's some things that I'm working on as well with my family, when it comes to international business and those things. And that's an area that I realize too that is very foreign to a lot of us when it comes to, okay, how do we do the financial planning around this? How do we do the tax management, right? What does that look like so that we can continue to grow and build a business around this? But, before that change, the main reason you're here is because there's a lot of changes that are going on right here in America. And a lot of things that people who, once again, may not be aware of it are going to have to deal with going into the new year, right? And like we say, one thing that we're really, that we really focus on here in the podcast is financial security, financial planning, so that we can really, like we talk about, enjoy that first sip, right? And we can just wake up in the morning and not stress about bills, stress about money, and just really enjoy the life that we want to enjoy. And if we're not aware of these things, then it's going to be pretty hard to do that. So, like I said, I wanted to bring you on this week so we can start talking about this. And this is actually the first of a 3-part series, guys. So David's going to be coming back on, further throughout to end out the year. And we're going to be talking about not only this, but things, like I said, that you should be doing going to the next year. Some ups and downs, if you're an entrepreneur, if you're a business owner, if you're, working at a company, and certain things, that you just deal with that people may not talk about, and kind of just let loose on, one of these episodes. So definitely look forward to that. But today, like I said, we're talking about the changes that are going to be happening going into the new year, whether or not, that might be somebody who's affected with the changes with tips, the deductions and credits that you might be able to get. The big, beautiful bill had a lot of things that affected, things that'll be going on in the new year. So David, let's not hold off any long. Let's get right into it. You let me know what you want to start with. You're the expert. What was calling out to you when you were talking about this?
Yeah. So the one big beautiful bill, which was recently passed, had a plethora of updates, continuation, because what a lot of people don't realize is with Trump's first administration, or his first presidency, he passed a new tax law,
Mm-hmm.
during 2017, starting 2017, and a lot of what he passed was set to expire at the end of 2025. So basically, what he was trying to establish with this new one is extend certain tax code that he had already implemented to extend it for future years. So not
Mm-hmm.
everything that was passed recently is permanent. Some of them do have years, a set date where it will cancel out or kind of revert back to how it was originally. But most of the bill pretty much extended what he had already established.
Mm-hmm.
But there are, of course, some nuances that were brought into play through this one big beautiful bill. Something we've never seen was like the no tax on tips, and of course the no tax on overtime.
Mm-hmm. I think that's the one that a lot of people reach out to me asking about when these things were first coming about. Because obviously, like I said, we talk about finances on here. They were asking if I was reading into it. I was like, I got to do research, talk to my people. So we're here. When it comes to that no tax on, let's just start with like overtime, right? And how does that look? How did it look before, right? Like let's say, okay, like you work an extra 10 hours, 15 hours overtime. What did that look like?
So, what it looked like was you just paid your ordinary income tax rate on any income that you received. So, there was no special deduction or anything. You
Okay.
worked overtime, you made money, you got taxed. Sometimes you weren't taxed enough based on the rate that your job was taxing you because when all of your money accumulates throughout the year, it might raise you certain tax brackets.
Mm.
But now you can, certain professions, and of course, this is not for every single profession. Certain professions can now qualify for up to $12,500 tax deduction on overtime if you're filing single, or $25,000 if you're filing married, filing jointly.
Hmm.
Yeah.
That's a significant amount of money.
Exactly.
Yeah.
Exactly. So it's like not paying taxes on $12,500 of your income if you're
Mm-hmm.
single, or if of course you're married, filing jointly with your spouse, you'll be able to avoid taxes on $25,000 of overtime pay that you received, which is
Mm.
significant. It's very
Yeah.
helpful. We'll kind of have to see how it plays out as far as the budget goes for the country. A lot of this is going to cost the country a lot of money, but on the personal side of things, it's going to help people, save some money. I mean, especially when it comes to overtime, people really bust their hump
Mm-hmm.
and work hard, especially if you think about like factory workers,
Yeah.
you know, maintenance workers. They work hard, and even of course, we got to talk about our police, our,
Mm-hmm.
our our fire
That's what I was thinking, like
departments,
healthcare workers and stuff like that
healthcare
work all over.
workers, of
Yeah. Mm-hmm.
course. They're working really really hard,
Mm-hmm.
and they deserve to enjoy some of the fruits of their labor.
Yeah.
Taxes is our number one biggest expense in life. We're paying taxes in every single direction. When we live, when we die, when we buy something, in order to buy something, we have a house, we're always paying taxes. So it's nice to
Mm.
see that some people are able to, you know, enjoy the fruits of their labor.
Yeah.
Now, that's for the
Overtime.
overtime. Now, there's also the no tax on tips. The no tax on tips is a $25,000 deduction. Um, and it's very interesting on who is going to really benefit from this. It's not there's a specific list of professions that can actually qualify this. So this isn't for everybody. But when you think about your waiters and your waitresses, your bellhops, your
Mm-hmm.
doormen, those are people that are going to benefit. But I actually made a post on this. They're saying that podcasters and OnlyFan
Oh,
models
I
are
did see it.
really
Yeah.
going to
Mm-hmm.
benefit, to a certain extent, because But from what I've seen and these outrageous numbers that only fan models are bringing in, they'll benefit some, but 25,000 isn't a lot in comparison to what they make.
To what some of the,
But
yeah.
it's very interesting. It's a very interesting concept. No tax on tips, up to $25,000. Um, a lot of people are going to benefit it. I think that waitresses and bellhops and doormen and people in those professions, they deserve that.
Hmm.
They really do, because especially for like a waitress, a lot of their income is coming from tips, not
Yeah.
necessarily from their hourly pay. So
So that's what I
they
was going to
deserve.
ask. How should they then be accounting for that, right? Like, how should they be managing that money as it comes in? Because obviously, when it comes time to file their taxes, right, all the money's just probably going to be going into one account, right? They might get their deposit maybe from a check, and then they have their cash tips that they're getting. And like I said, it's just probably all dumped into one account. So how should they be keeping track of all of this stuff?
So it's going to really fall more on the employer's job, because a lot of the tips are coming through credit card transactions. And of course, waiters and waitresses, to my knowledge, they're supposed to
Mm-hmm.
report to their employer how much they received in a cash tip. So if it really does add a extra layer of work for the employer,
Mm-hmm.
but in reality, that is their responsibility to keep
Mm-hmm.
track of. Okay,
That's yeah.
my employee, my waitress, she received this much in total for the year. This is
Mm-hmm.
how much we're going to deduct based off of what she qualifies for. That's not counted as income.
Mm-hmm.
And yeah, so it's gonna be more work for the employer. But the deduction is going to be easy to report for. It's going to be on a schedule. I believe it's going to be on schedule one of the 1040. So you just go ahead and file. Depending on your profession, you'll be able to file for that deduction. And so the process is not going to be very hard, but
Hmm.
they do
Yeah,
have
I
the
wonder.
employers are going to have to keep track of
Do the right thing.
exactly what
Yeah,
people are receiving.
yeah. And I wonder how that's going to be, if that's going to create any issues later down the line. But
It is going to
yeah.
create. It
Mm-hmm.
is going to create some issues. It's going to create some issues on how people want to kind of categorize their income, and I think that that's the dangerous part of it, because a lot of people are going to try to categorize their income that they're receiving as a tip. Like let's say for
Yeah, that's
instance,
what I'm thinking.
I
Yeah. Mm-hmm.
I did someone's tax return and I'm charging them $250, right?
Mm-hmm.
And
Mm-hmm.
I said, okay, no, actually, I only charged them $1, and they gave me a tip
And I
for
tipped
two
you
hundred
two
and
forty
forty
nine.
nine
Yeah.
dollars. That's gonna cause some problems,
Yep.
you see. So, and the thing about taxes and loopholes, people try to take advantage. So there is going to be a learning curve. There is going to be some extra work for the IRS when it comes to combating the fraudulent actions of individuals on saying, oh, okay, no, I didn't receive this much as income. I received
Mm-hmm.
it as a tip. So, like anything, there's going to be some growing pains. Um, but for those that qualify for it and do it the right way, they're able to enjoy and taking advantage of this loophole.
Gotcha.
Yeah,
Hmm.
yeah.
Now, one other thing I wanted to go back really quick before we move on from this, because you said that this is going to cost the country a lot of money,
Hmm.
right? With this change, obviously the country makes money right from its tax revenue, and cutting down on these things is a significant cut to it. Do you think this is another reason why, like, because tariffs is another thing I've been talking about a lot throughout this year? Do you think tariffs is this is another reason why they're pushing so hard for tariff income? Like start getting revenue from these other countries because they know that they are making these changes with the tax policy here.
I definitely think that it attributes to the reason why that Trump is pushing tariffs so much. I think it also has to do with his him wanting for our country to get what they deserve because we
Hmm.
do dish out a lot of money for all sorts of reasons. And I think that he just wants to stand on stand 10
Stand on
toes down
business. Yep.
basically. Stand
Yep.
on business. He ran on raising tariffs. He ran on getting America the money that they deserve and being um, uh, being recouping all the money that we've dished out for decades.
Hmm.
So I think that it does play along because if we're cutting taxes, the government is going to receive less tax income, and so we need to find the income from other areas. But it is important that the American people feel like we're getting something for what we work for. We
Yeah.
see a lot of our money, tax dollars, go out to other countries for sometimes reasons that we may not agree with as a
Hmm.
country. Some people might agree, some may disagree. So where do we start feeling like, okay, we're finally getting something?
Yeah, we're seeing some change.
We're,
Oh
we're,
yeah.
we're getting
Hmm.
some change where not everything that we're working for is for somebody else,
Yeah.
somebody else's country, somebody else's problem. So I think that, yeah, that's why tariffs are being pushed a lot more. But honestly, Republicans don't like taxes and the IRS in general. So part of the conversation has been getting rid of the IRS entirely, getting rid of the
You
tax
read my
system
mind.
entirely. So yeah, the Republicans generally don't like oversight from the IRS. So I guess it's kind of a way to try to get into a position of getting rid of taxes and just receiving income from only tariffs. But that's a difficult thing to do. It's a
Hmm.
difficult thing to do. You can't do that in one administration. There's no way. 4 years with all the problems, all the different focuses, especially with the multiple wars that's happening across the world. There's no way that there's
Hmm.
time and um, enough support for them to completely do away with taxes.
Hmm.
And at the end of the day, there needs to be some sort of cut in order for these tariffs to kind of come into play because now you're basically, if you're paying taxes at a high amount and then you're also paying tariffs, because we all know that with the tariffs we're putting on other countries, that's going to fall back on us in one way or another, and
Hmm.
that's definitely at the checkout line. So if
I'm
we're
glad
getting
you said it.
taxed high and paying the repercussions of the tariffs, nobody's going to have any money.
Bro,
We're
I
going to
was I was
drown.
just about to ask you like if it looks just like a never-ending cycle to you. Excuse me,
What's that?
because when I think about it, it's like you're saying, okay, you have the cuts on the taxes, right? So you're having some savings there, but then when you go back out the door with the savings that you've made from that, as a consumer, now you're spending on higher priced items, right? And it may not be on every item, right? But on maybe things like appliances, furnitures, right? Like those big ticket items,
Mm-hmm.
you know, automobiles, like those kind of things where you look at it and it's like, wait, that extra 3,000, I thought I was going to save that this year. It just went out the window. Or maybe you have to call somebody who who's importing items from overseas, right, to do something at your house or at your apartment, and they're like, oh yeah, my fees just went up by 20% this year because of extra costs that I'm now managing.
Mm-hmm.
And that's why to me it just kind of seems like a revolving door where it's like, okay, we say we're saving you some money, but at the same time you're still going to have to spend more money once these
Right.
people realize that they have to spend more money. So we actually haven't found a solution yet. And that to me is scary, right? Because I wonder if this is just another one of those changes that just keeps the ball moving along.
Right.
And a few years down the road, we're all going to be sitting here scratching our heads saying, wait, we're still in the same position that we were in the last 4 years, 8 years, 12 years, right? And
Right.
nothing is getting changed. Nothing is getting better. It's actually getting worse.
it's kind of like what magicians say with the sleight of hand. You know, one thing
Yeah.
is happening over here while something
Yep.
is happening actually in this direction. So,
Mm-hmm.
yeah, I agree with you. It kind of reminds me of that, like the revolving door. Okay, yeah, I'm saving 1,500 on my taxes, but you know, I'm paying a lot more money for eggs and bread and milk, and
Mm-hmm.
plus, like you said, the big ticket items, buying a car, you know, all of that. Yeah, it kind of offsets itself. But
Yeah.
I think it is important for us to get money from these other countries. It is very important,
Mm-hmm.
and the U.S. has become quite friendly with the spending as far as
You can say that.
investing in other things,
Mm-hmm.
dishing money out. So,
I think we just sent another 20 billion out like 2 weeks ago to Argentina.
exactly,
Yep.
exactly. So we're quite friendly with the spending. There needs to be a point where we're saying, okay, we gave you this money, we need some more money back. Of course, that does hurt the consumer, but we'll figure it out.
Mm-hmm. Yeah.
We'll figure it out.
So, getting back on track, what's another change that we should be expecting going into the next year, or something that you're really, like hammering home with your clients recently?
The one change that I actually love that I was hoping that they were doing really involves the SALT cap, the state and local tax cap. And this is really important for those living in these high property taxed areas like New York, California. Probably I won't say Pennsylvania so much, but
Jersey.
especially I have a lot of clients in New York.
Mm-hmm. Do you
And
do
New
any work in
Jersey,
Jersey? Yeah.
forget about it.
Yep.
Jersey, the
Mm-hmm.
property taxes in Jersey is crazy. So prior to this, the one big beautiful bill, the cap was at $10,000. Now they're raising it up to $40,000 up until 2029, which is huge because now people that are living in these high taxed states can benefit more for the taxes that they're paying. Because
Mm.
if for one thing that I've seen, they kind of go hand in hand. If you're paying for a home and property taxes in these high tax states, it also what goes hand in hand with that was that you have a good job, so you're making good
Yeah.
income. So you're also paying a ton in state taxes as well. And for a lot of those individuals, the state taxes and the property taxes that they're paying, getting capped at $10,000 was crazy. I've seen people pay in just state taxes $10,000 or in just property
Jeez.
taxes $10,000.
Yeah.
That's not even accounting for what they paid in state taxes or local taxes, especially for those living in like cities like New York City. So this is a big win for those people, and I was really, really hopeful that we'd see an increase in that area for quite some time because a lot of my clients, like I said, do come from New York, New Jersey. They're paying a ton in taxes and state taxes and property taxes. So it kind of hurt to say, you know, your your benefit is only capped at $10,000. It
Mm-hmm.
hurts because they're paying so much. So that's my favorite addition that they made. Of course, they increased the child tax credit,
Mm-hmm.
which is now $2,200 opposed to the $2,000 previously, with $1,700 being refundable. So that's a
Mm-hmm.
nice addition for families, for those with children. Um, yep. You want to say something?
Speaking of children,
Yeah.
the new like Trump savings account, when is that supposed to go into effect?
That's supposed to go into effect with 2025. It was it
Okay.
was passed through the one big beautiful bill, which is
Mm-hmm.
a very, very interesting concept. To If you have a child in 2025, the government is basically giving you $1,000 in an account that kind of resembles a Roth IRA. It's not necessarily a Roth IRA, and the tax situation is different, but listen, it's free savings for a child. I
Mm-hmm.
mean, it's a big win. It's a big win for families out there, for parents, to have some money that can grow for the lifetime of your child,
Yeah.
that's a very very big win. But it's also very expensive, and kind of you got to think like, where do people draw the line? Like, so if I go out and have 10 kids within a certain amount of span, I'm costing the country quite a bit of money.
Yep.
You know,
Tell your wife, be like, honey, listen, I'm telling you, this plan is going to work. Okay, we can
yeah.
get 10. We can get 10,000 within the next year. Okay. Like,
I mean, it's not something that the parents can spend. So
yeah.
it's not like, okay, you have a kid, you get 10,000 or 1,000 for each kid.
Hmm.
It is for the child, and I have to get more information about the ins and outs of the account, but from my knowledge, it is like a savings.
Mm.
It's an investment account that's supposed to grow for a certain amount of time before the child is actually able to access it, but, or before it actually goes in. Because as you've seen with other investment accounts, UTMA
Yeah. What's
accounts,
the other one
UTMA
that they have
accounts, like
for?
529
Thank
plans,
you. Yeah,
those
529.
those aren't necessarily in the kids, the name of the children.
Mm-hmm.
There's custodians on those accounts,
Mm-hmm.
like UTMAs, which are Uniform Transfer to Minors accounts, UGMAs, Uniform Gift to Minors. Those
Yeah.
have custodians on it, so they're not necessarily accessible to the children until a certain age, depending on
Mm.
the type of account.
Yeah. I
And
gotta dive in
so
and learn
like
some more about that
529
too.
plans, um, 529 plans, they're meant for education purposes.
Mm-hmm.
They're not for just free spending. They're
Yeah.
meant for education purposes. What I do like, that they updated with the 529 plan, is that if the child doesn't use it by a certain age, they're actually able
Mm-hmm.
to roll that over into a Roth IRA account, which is very interesting.
Yeah, that's great.
Very, very interesting, because
Mm-hmm.
with Roth IRAs and other IRA accounts, you need earned income in order to fund those accounts. Earned income meaning income that you actually work for, whether it's from business, your salaries, W-2 wages, tips,
Mm.
whatever, however you generate income. You need that in order to fund Roth and traditional IRA accounts. But now, if you're getting gifted into a 529, and then eventually you're able to roll it over into a Roth IRA, that's beneficial. That's very
Mm.
beneficial, because
Yeah.
you didn't have to work for that money,
Yeah.
and
That's
that's
18 years
kind
of
of like
savings.
yeah, it's like a little
Yeah.
loophole to kind of
Mm-hmm.
get money into a Roth IRA, from a 529. It's pretty
Yeah.
interesting.
That's why I wanted to bring that up, because I know we're talking about taxes here, but these are all things, right? Like, that are kind of, I think, interconnected.
Hmm.
And I know we have friends who are having, kids right around this age. So I'm like, all right, let me make sure, we touch on this as well, because there's obviously, tax implications that come into that too when you're putting money into these types of accounts. But, we can dive into that at a later point.
Hmm.
But, let's stay on topic today. What was
Yes,
the
sir.
next thing, that was really on your radar?
Um, well, as every year, the standard deduction got adjusted for inflation.
Mm-hmm.
The new standard deduction for 2026, which is really important for people to know, because that's the year that we're going into, has been adjusted for inflation and is now $16,100 if you're filing single, $32,200 if you're filing married. And those are for those that do not itemize their deductions. So there's two deductions that you can claim. Well, you can claim one of the two. You can either take the standard deduction, which for the majority of people, that's the direction they go through. Things might change now because of the new SALT cap. So the SALT cap could, now change how people, if they decide to go with the itemized deduction, or if they decide to go with the
Mm.
the standard deduction.
And
So,
I want to hold on here, because this is probably where some people are going to be listening and be like, "All right, you guys are losing me."
okay.
And this is where people are probably going to have to realize that this is where TurboTax no longer works for you. All right. This is where you got to stop using TurboTax if these things are things that you're realizing like, "Yo, I should be taking advantage of this."
Mm-hmm.
I'm a homeowner, I have kids, I'm employed, maybe I'm self-employed. I got a lot of different factors going on, right? I'm no longer at my first job just taking out 2 or 3 allowances, when I file my taxes and saying, okay, let me go into TurboTax at the end of the year and type in what I got, from my company and just wait for my tax return.
Mm-hmm.
The number one thing, like I said, we've connected in the past couple of weeks because I need to get caught up on my taxes. Being an entrepreneur, being a business owner, I have no idea what to do in that space, right? And it is a whole different world to learn about. And I'm like, okay, what should I do? Let me go to somebody who lives and breathes this stuff, right? And who knows it like the back of his hand, because just like I was saying, that's why I wanted to kind of cut in there, because this is the part where somebody's going to like try to say, okay, well, let me try to figure out how to get all these deductions and how to save all this money, because I heard David on a podcast, or I heard somebody else on YouTube, talking about all these different things that we can do to save money. So I'm going to try to learn for myself and just get yourself in a world of trouble, right? And the thing you really need to do is pick up the phone, send an email, whatever the best way to get in contact with him is, right? Obviously, stuff's going to be right there in the description, but reach out to somebody, an actual tax expert, right? Somebody who is an actual, who is certified, licensed, professional in this space, who gets it, who can really advise you and say like, yo, this is what you should be doing. These are the recent changes. These are the things you need to be aware of as you move forward. Hey, I know we talked about this business, because there's so much that once again, we as people who don't pay attention to this stuff every day, we have no idea about it. And when they start diving into those terms, that's where we can get ourselves in trouble. So right. That's what I want to say, David, just making sure that, like anybody who's hearing that, it's just like, all right, what do I do? That's what you should do.
Yeah, and especially when it comes to business owners, and after this point, I'd love to get into like the topic of maybe some tax tips to kind of end out the year, especially when it comes to business owners. But when it comes to business owners, we wear a lot of hats, and sometimes the hat that we're wearing we shouldn't be wearing. So, when you're starting your business in the beginning, you're gonna kind of have to wear those hats because there's not really any money, right?
Yeah.
But when you finally get to the point where you're generating income, it is best to let somebody take over, or outsource, things like accounting, because they'll be better structured. They'll know all the ins and outs, how to categorize everything, how to be ready for, quarterly sales tax, or quarterly estimated payments, or getting you ready for the end of the year. And of course, whenever you're looking for loans and banks, some of the things that they're asking for, they want P&Ls, they want balance sheets, so if you're not in the position, or you're not in the profession of having those things, or doing those things for your business, then it is time for you to outsource. In the beginning, you're going to have to wear that hat because there's no income and you can't outsource it. And I was just listening to an interview of Robert Herjavec from Shark Tank. He was
on
with
the EYL one? Yeah.
And he said it himself. In the beginning, you're going to have to wear, you're going to have to do the sales. You're going to have to do the accounting. You're going to have to sweep and mop the floor if somebody spills something on the floor. And as a business owner, but once things are rolling, you want to get organized. And the problem is that you don't want to take time away from what you're good at in your business, because now you're limiting yourself on how much money you can make. If you got to spend hours doing the accounting, maybe it was actually cheaper for you to outsource that job to somebody else so that you can focus on making that next $2,000, $10,000 sale, $1 million sale. At a certain point in the beginning, yeah, you have to wear that hat, but at a certain point, it's pivotal for your business for you to outsource and get other people involved, because, like Robert and them said on that show, on that interview, you only have two hands, so you're not an octopus. You can't be in 8 places at once. So I think that's a definitely a great segue into getting ready for
you read my mind.
The end of the year.
Yep.
The end of the year.
Get a way to start lining up the tips.
That's right. That's right. So, especially for business owners, this holiday season is some of the best time of the year for tax deductions on multiple fronts. Why is that? Well, There's something called holiday parties, right? We could get our staff, we can get our clients, some of our best clients, our families together. And for the business owner, if you're paying for an event or a holiday party, that's a tax deduction for your business. Of course, there are some stipulations like having a checklist, having a sign up sheet, making sure you
Mm,
account for everybody that's going to be there. And of course, you want to invite your staff, you want to invite your clients to the event. You want to have those people present. But what better time than the holidays to kind of bring people together, right?
yeah.
And then, of course, the holiday season is a time of giving. So, I know you shouldn't give, or people say you don't want to give and expect something in return. But listen, there's tax deductions involved. You can't get a tax deduction for your giving, whether
Hmm.
if it's through giving cash, giving items, giving time. That's a tax deduction. One of my favorite tax deduction kind of loopholes that is great during this time of the year is especially when you're bringing in those holiday parties to your
Hmm.
home, having people to come together is the Augusta rule. The
Mm,
Augusta rule,
yes.
you've heard of it.
Yes.
Yes, the Augusta rule is so beautiful because it allows you to rent your home to your business 14 calendar days out the year. So it doesn't have to be 14 days straight. It could be 1 day here, 2 days here. You can have meetings, masterminds, holiday events. As long as you're bringing in or corporate shareholder meetings, as long as you're bringing in people together, business, people that are part of your business, staff, clients. You can rent out your home to your business for 14 calendar days, and the homeowner does not have to report that rental income as income on their taxes. So it's a tax deduction for the business, and it's tax-free income for the homeowner. And
Mm,
you can do it with your own home. You could do it with somebody else's home. Makes no difference. But if you really want to capitalize on this loophole, you want to do it out of your own residence. Of
yeah,
course,
that's
there are
interesting.
different things. This is just touching on the concept. It's not. I'm not getting into great detail on how do you figure out exactly how much you could rent it for.
Of course, yeah.
What do you need as
Hmm.
far as documentation goes. This is just a
Yeah.
general touch, but it's a great loophole. And the holidays, people are coming to your home already.
Hmm.
So why not bring your family together and start talking money, start talking business? You know, it's
Yeah.
it's
Because a
they're
lot of
already
people
there.
don't. A lot of people don't, and that's one thing I talk to my family about all the time. I'm like, listen, for all these times that we, hop on the phone and talk to people about absolutely nothing that has nothing to do with us,
Exactly.
we got to make sure, like, people should be talking about business, things that we can be doing with the future. That's why I love, the way my family like comes together to do business, with the real estate that we're doing, which is why I learned, about that rule a little while ago. But also, it's going to be interesting, focusing on that rule because the World Cup is coming here to Philly.
Right.
I believe it's next year, right, or maybe the year after. Very
Yeah, I
soon.
think in 2026. Yeah.
Yeah, yeah. And when that happens, a lot of people are going to be able to take advantage of renting out their spaces for the influx of people that are coming to the city. You should have seen it how it was just this past summer when they had the what was it? Like I think it was the UEFA Cup, the FIFA Cup,
Hmm.
like the club league,
Okay.
and the amount of people who they had here in the city from different countries, different cities, who were all here just for soccer, it blew my mind. But what I wanted to get clarity on was, does it have to be, because you said 14 calendar day, does it
Hmm.
have to be consecutive days, like back to back to
No.
back, or can it be
No, 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 no,
throughout the
no,
year?
no. Throughout the year, it could be
Okay,
done. Like
cool,
I said, if
cool.
you want to hold a shareholder meeting 1 day, or a mastermind for 3 days, then a holiday party for another couple of days. It doesn't, different months. It could be different months. It could be consecutive, but consecutively, it's a little harder to say, okay, we're doing this for 14 days.
Yeah,
We're having a
that's what I was thinking.
mastermind
Yeah,
for 14 days.
it's like, all right, we got to leave the house for 14 days. So,
Right,
but don't worry, we're gonna make the money back.
right.
Yeah,
But,
yeah.
the Augusta rule, and though it was made from Augusta, Georgia,
Mm,
because I believe it was based around golf. Though
yeah.
it's not around like a
Hmm.
soccer,
Yeah.
but it started because there's like a big golf event in Augusta, Georgia every year. Um, and that's where the name kind of came from, Augusta Rule, Augusta, Georgia, because homeowners would leave that area during this tournament and rent their home to people that are coming in for the tournament. So it's kind of like the same thing that's going to happen with the World Cup. There are
Hmm.
people that are going to leave. One, they don't want to deal with the tourists, or two, they want to make some extra money. They want to rent
Yeah.
out their home. So it's going to be exactly the same way as the conception of this loophole is from
Yeah.
Augusta, Georgia. It's the same concept.
And like you're saying, yeah, like you're saying, people may not have an idea of how much they can rent their space for.
Hmm.
If you guys do have questions about that, feel free to reach out to me. That is my space of expertise.
Exactly.
But what I was gonna say is that you can really make a couple $1,000s within this 2 week time span, depending on where you're living, right, and depending on the demand for
Hmm.
your area at the time, because people are willing to pay, for a good quality space, something that's safe, reliable, and that they don't have to worry about. Because check the hotel prices. If you want one thing to check, just check and see how much the nightly rate is at your local hotel,
Hmm.
and just say like, okay, well, how's my place compared to some place like that, and just go from there as just a starting point, right? There's plenty of other things you can add in as well from there. Maybe have a vehicle available for them to drive around when you're doing those kind of things, and of course, that's other ways you can make income. But there's a lot of ways that you can make money with things like this, and like you're saying, different ways to save money on taxes as well. So I think it's so cool when you start learning about those areas and seeing what people who start climbing those tax brackets start doing to not only make more money but to keep their money. I'm just like,
Exactly.
okay, they're playing a different game.
Exactly. And
Hmm.
that's really what it comes down to taxes. When it comes to taxes or just money in general, it's not about how much you make, it's about how much you can keep. Because if you're making a lot of money but you're paying 40 to 60% in taxes between
Mm,
federal and state taxes, you're not keeping a lot of that money. You're working a lot for free. In
yeah.
technicality, you're working a lot for free because that money is going to everywhere else besides your pocket. So
Hmm.
it is very, very important to figure out how you can save money on taxes, keep more money in your pocket. Um, yeah.
Yeah, I love it. So we're winding down here towards the end of the episode, right? I think we dropped a good amount of information on people, something that they like we said in the beginning, things they should be aware of as they go into the new year, right? Some tips that you dropped, that things that you should be aware of. Were there any other tips that you wanted to leave them with?
Yeah, so
Hmm.
especially when it comes to business owners, one way to kind of save money on taxes for this year is maybe sometimes deferring income until the following year. So if you're going to do a job, maybe say, hey, listen, don't write me a check until January 1st, so that way I don't have to realize that income until
Okay.
the following year. And you always want to look at where you're standing at right now. You don't want to look at the end of the year. You want to start making plans now, and that's why I think that this particular conversation was super important to get out now because you still will have a couple of months to make those last minute changes and adjustments before the year is out. Because once the year is out, there's nothing you can do. You can't go back in time.
Yeah.
Um, so yeah, you can look at the deferring income, look at charitable donations, maybe implementing the Augusta rule, but most importantly, you want to have a plan. You want
Hmm.
to have a plan not only for how you're going to file in the incoming year, but also have a plan on how you can really start taking advantage of all the tax code because 99% of the tax code, I'll say 98% of the tax code is ways for you to save money opposed to you having to stop and pay taxes. So,
Hmm.
having a plan and speaking to the right people is gonna weigh the tax savings should outweigh the cost.
Hmm. Okay. And speaking of savings, because I know sometimes when, not even sometimes, a lot of questions, one question I get a lot throughout the week when people are reaching out to me about whether it be working with rentals or looking to find a home is how much does it cost to work with you, right? And I think that's something that kind of hides behind a wall of mystery with, like people in the professional like services space,
Mm-hmm.
because it's not really advertised, directly on our website, directly on our social media pages, like some product that you can just grab off a shelf and buy, right? Because things vary depending on how complex your situation is, how in depth you really have to dive in with it. So it varies. But let's say somebody just comes to you with just a real general tax situation, right? They just need a normal filing for this year. Maybe they're a business owner or employed. Can you give them an idea of what they can expect cost wise?
Yeah, so as far like let's say you're just like a regular employee. If you're filing with kids, probably around 250 to
Mm,
the 285 mark. If you're filing just by yourself, it should be a lot cheaper, probably like $215,
mm,
200 to maybe $235 for a tax return. So it's not the biggest amount in the world.
yeah. Hmm.
But I think that, and that's just for a tax return, but I think that the series of conversations and consulting is really where, I like to try to generate income from, because, that's where I feel as though I can be my most helpful.
Mm,
Because filing a tax return, of course, people need help doing that. That's fine, and I'm willing to do that, and I do it. But there's only so much I can do to help with last year's problem, you
hmm.
know? So I like to have more in-depth conversations. We do charge hourly for it, depending on how long you want to do it, and how you want to go about it. And if I have to come to you, obviously the charge might be a little bit more. If we do it virtually, we have some options where we can do, 30-minute consultations, hour consultations, multiple hour consultations. So
Mm,
it does really, really depend. And I think that that's why I don't think that it's so much a thing where people don't want to disclose how much they charge. But it's like you said, it's really, really varies. I'm going to tell you
yeah.
this, Dikembe. I barely see people, two people, twins, as far
No,
as their
exactly.
situation goes. I mean,
Yep.
the
Yep.
slightest thing can make all of the difference. And I've had conversations with clients like, oh, oh, I'm making so much as X amount as Joe, and I'm we claim the same exemptions on our W-4, and but he's getting so much more. He's getting the Well, listen, does Joe have kids? Is Joe married?
Yep.
Does Joe have other deductions? Excuse me. Does Joe have other deductions that you don't know about? If he does, then it might look like you guys are the same, but the slightest thing could make all of the difference.
Hmm.
And that's what I try to tell my clients, like, listen, don't compare yourself to Joe or Mary or Kate or whoever your friends. Your situation is your own situation. They have their own issues, they have their own problems, they have their own way of doing things. But also, what do you really know about their actual situation? Who says that they're telling you the truth?
Yep. Could
Who
be lying.
says that the person that helped them is correct?
There you go.
You know what I'm saying? So,
Could be a whole setup.
yeah, exactly. Exactly. You should see the court cases that are happening. I, I've seen so many crazy, crazy things when it comes to taxes and these false tax credits. I had a girl that she was my client for quite some time. She decided to use somebody on social media. And when you go and look at this person's social media, you go ahead and you say, listen, this girl is not serious. These are there's so many quick. Let me enter the business. Let me make these quick grab, run off,
Mm,
skate off with the money, and leave the problem with the taxpayer. There's so many of those situations that there's so much fraud happening.
yeah.
And they'll put anything on your
It's like the
taxes.
credit.
They'll
It's like the credit
increase
repair
your
industry. Yeah.
income. They'll increase the
Hmm.
taxes that you paid. They'll they'll put you in tax credits that you, and one of the big ones that was being used was the solar credits. A
Oh,
lot of
okay.
solar credits for people that don't even have homes. They're claiming this tax credit.
Really?
And you know what's scary is, and where people don't pay attention, do you see the name of the individual on the tax return? If you don't see a name and a company there, and you see self-prepared, they're using TurboTax or one of these free tax sites.
Mm.
They're doing your tax return. They're
Mm-hmm.
charging you cash. You don't know what they're putting on your tax return. There's no implications or anything leading to them,
Mm-hmm.
and they're just running off. And that's exactly what happened to this young lady that I'm describing in this story.
Mm-hmm.
She used someone from social media. They used TurboTax to prepare the tax return, and they filed for a credit that she did not qualify for, and now she's dealing with a big tax bill. And that I've seen that forget it a countless amount of times. I see so many social media posts. Oh, we're gonna get
Mm-hmm.
you $13,000. We'll get you 15,
That's
twenty
interesting. Yeah.
thousand dollars.
I
Listen,
mean,
I'm
I
sorry.
think, yeah, I think on our last episode, or maybe 2 episodes ago, we talked about like the scams that were going on with the pandemic money, right, and
Forget
how people
about
were
it.
filing for that.
Forget about it.
It never ends. That's the thing that I realized too, man. After doing this for a few years now, it's like there's always going to be that new scheme, right? That new get rich quick scheme that's going to say,
Yes,
oh, save this amount of money, make this amount of money quick, and it is just a trap. It
it
is
is.
all a trap. It is all a distraction. Stay focused, people. Stay focused.
And it upsets me because I've been in it for so long, and then people want to have conversations, and they try to make it sound like, oh well, this person said I could get this much. And the scammers really upset me because they bring illegitimacy to us
Mm-hmm.
professionals that are really really out there to help people and really guide them the correct way. They take clients because they promise them dreams and wishes. Oh, you're going to receive $15,000, even though you're a single individual making $30,000 a year, but you're going to get a
Yep.
15,000. You're going to get half of your yearly income in a tax refund.
Exactly.
Like, I don't get it. I don't get it. And what
We're gonna
allows
add
them
a
to
couple
really
kids
do it?
that we're gonna add a couple kids to your return that you
Right,
don't have.
right. We're gonna add tax. So it really upsets
Mm-hmm.
me because they're in it for the money. And
Mm-hmm.
the thing about becoming a tax professional is that the qualifications to get in or to start preparing tax returns is really not much of anything. You
Mm.
file for a P10. Maybe you take a class, maybe you don't. You pay a
Mm.
fee, and you can technically start preparing people's tax returns. And
Interesting.
there's so many, like I said, there's so many different ways that you can go about doing it where you don't have to put your name on a tax return. So, yeah, and then if you're charging cash, you don't have to worry about collecting your fee. So it's a mess. It really,
Mm.
really is. I know that there have been some talks of kind of, you know, wrapping in and making qualifications a lot more difficult and really weeding out the bad apples from the group that are trying to do the correct thing. Um, and another thing that bothers me is that and of course I have no problems with people that come from other countries, but there's a
Mm.
lot of people that come to America during tax season, help people with their taxes, and then they go back to their own country,
Mm.
and then
I've heard
people
about
are
that. Yeah.
living with
Mm-hmm.
these tax bills at the end of the year, these
Yeah.
problems, these issues, and there's no one around
Mm-hmm.
to
The
help them,
international
of
play.
course. But
Yeah.
that's when I
Mm-hmm.
come in and I'm like, okay, listen, I can help you.
Mm-hmm.
We can fix this problem. Of course, there's going to be a fee involved because, you know, as much as I like to give, I have responsibilities and I have a business to run as well.
Mm-hmm.
So I can't do it for free, but I will be there to help you. But it just rubs me the wrong way,
Yeah.
seeing it so much. But it's been something that I've seen since I was 18 years old, since I
Yeah.
started my career in taxes. So it is what it
Mm-hmm.
is. It's not going to stop, but people just have to be smarter.
Mm-hmm.
Be smarter. Remember, this is your social. I always grew up with saying, listen, my social is one thing that I can
Mhm.
never share with anybody. But people are very comfortable switching from person to person. You're giving out a lot of private information. Yeah,
Bro,
maybe
private
it might.
information, like privacy doesn't exist. It's I think it's this myth that like people want to tell themselves that they really do like care about, but then like you said, when you look at the actions that we all go about doing on a regular basis,
Mhm.
it's just so easy, like you said, to jump from one to the next because we live for convenience
Exactly.
and whatever's easiest. You know what I mean? And it's like, okay, if that didn't work out, go to the next thing. Keep it moving. Speaking of, like, I think there was a not I think I know there was a study that came out where I think it was a couple years ago where they had a group of people and they asked them, they said, okay, listen, we'll give you a free McDonald's like hamburger or like cheeseburger. Have you seen this?
Yeah, that was in the conversation with Robert
Yeah,
and
yeah, yeah, yeah.
EYL. Yeah,
Right, yeah, yeah. So they were talking about that study where it's like, hey, we'll give you a free cheeseburger, right? If you give us this information, your name, address, phone number, blah blah blah, and you can get a free cheeseburger. Like 70% of people who were asked it went ahead and gave the information,
yeah. 72%
right?
of people
Yeah,
did it for a burger, free food, for
free
free
food,
food.
man. So that's what I mean, like personal privacy or a hamburger. Which one?
Right, right. It's interesting times, my friend. Very
Yep.
interesting times. I think that the warning should be people think a little bit, and if it's too good, if it sounds too good to be true, it usually is. There's usually some underlying issue that's
Mm-hmm.
gonna come from being from wanting to receive dreams and wishes from somebody that you don't even. I mean, it's people that you don't even know.
Yep.
It's people you never met in your life, and they're promising you dreams and wishes. I
It's like something about this sounds too good to be true.
yeah,
Not that you want to be like negative, right? And just
right,
like look at everything in a pessimistic way, but it's like sometimes, like you said, just use like a 10% of your sense and just be like, all
exactly,
right, let me try to vet this out just a little bit more,
right,
right? But like I said, I think sometimes we avoid that vetting process because it's like, you know what? If I don't vet it out and something does go wrong, then I can just blame them,
hmm,
right? And I can be like, oh, well, you misled me, and not, oh, I didn't do the work before getting into this relationship to find out, right? Like people say, look at the red flags
hmm.
to be aware of what I should be aware of. But man,
But
it never ends.
one
Yeah.
thing I can say, one thing I can say is that scammers, they're really good
Hmm.
at covering their tracks.
Oh
They're
yeah.
really really good at covering
Oh
their
yeah.
tracks. They trust me, they're not they're because they want a long career in scamming.
Hmm.
Because the more free money you can get and take from people, those who last the longest, they really win the pot of gold at the end
Hmm.
of the rainbow. So they're gonna take the steps to cover their tracks and do things in a way where they're not out there, their neck is not out there. The problem falls right back onto your lap, and then that just
The
wraps you
fall
up
guy.
into big problems, especially with
Hmm.
identity theft. I thank God, knock on wood, have never had the situation of identity theft me
Hmm.
personally. So, and that's why I'm also very careful who I speak to, what links I
Yeah.
click on,
Oh yeah.
emails. If I
There's
don't
so
know,
many
I
nowadays
delete
that
it.
come through people.
I
Yeah.
barely click on the emails. Um,
Getting 10 calls
and
a day now with the scam likely stuff.
yeah,
Yeah.
yeah.
Hmm.
So you got to just be careful. Got to be smart, and just there are good people in the world, but there's also a lot of bad actors,
Hmm.
and those always seem to be the ones that find you, the ones
Yeah.
that want to do bad. So
Yep.
just be smart. I thankfully have a great clientele that provide me referrals, and that vetting process does is not very extensive because
Hmm.
I've been in the game for a while, for a
Yeah.
long time. I put my face out there, I put my information out there, and I get on podcasts, I have conversations with people on the phone. I want to be out there. I want people to know who I am, to know. And one thing that my stepfather taught me when he got me in this business is consistency is really key.
Hmm.
Because you'll see a lot of tax professionals, they come and they go. But those that stay around the longest, the ones that are consistent, that are always there, you're gonna get the client at the end of the day.
Yeah. I love that because that reminds me of what we were talking about last week before our fiasco,
Hmm.
which was just once again one of the reasons why we continue to do this, right? Is to show people like, hey, they really still in the game,
Yeah.
right? I remember listening to them kicking it 3 years ago,
Right.
right? On the first podcast,
Yeah.
and now look at them. Look at the growth, right?
Yeah.
Look at the consistency, and
Consistent.
it really is a beautiful thing to see.
It
It
is.
really is. Yeah.
I'm so proud of you, man, and
Likewise, brother. Yeah.
I love coming on the show, and I need one of those
Hmm.
sweaters, and
Yeah, I got you.
yeah,
I got you.
man.
Especially with this winter, man. Yep, it's getting cold.
The winter they're saying is gonna be a strong one, man.
It's starting off strong. So,
Hmm.
and if people know, if you've been listening to this, I do not like the cold,
Don't even get me started. I am
bro.
not. I was not bred for the cold.
We're not. I was. That's why I said. That's why we are not meant for this.
Mm-mm.
Our families left the country and brought us to the Northeast and said, you know what, this is where we're going to have the next generation. Why?
Right.
I know my dad's watching this. Why?
Yeah, you did. You did it to the Kinbei. You did it to
Right?
the
Like
Kinbei,
now
man.
we got to play it. Now we got to plan a way to get back to the warmer places.
Exactly.
But
Exactly. And
yeah,
that's only for a short amount of time. And I actually. I'm sorry. I know
no,
I'm
you're good.
dragging out,
Yeah,
but I actually went to Africa a few months ago
yeah. You were telling
in
me.
June. In
Hmm.
June, my wife and I went to Africa, and I didn't even know Africa had a winter. And excuse me for my
Yeah,
ignorance. I didn't know it got so cold over there in Africa.
bro. Snow top mountains, like all of it. Yeah.
Frost and
Hmm.
cold winds, and I went there for the sun. And I got
Psych.
the exact opposite. I froze my ass off. I
Yeah.
still did like the water activities, the
Uh huh.
shark diving and stuff like that,
Hmm.
but it was
That's funny
cold.
because me and my dad were just talking about that too a couple weeks ago about because he watches this, I forget his name, but he watches one of these vloggers and he travels to a lot of African countries and Caribbean countries, and he was there during the winter time and it was like snowing, and we were talking about that. I was just like, yeah, a lot of people I guess don't realize that it's up there, right? Like it's right on line with us, right? Like if you
Right.
draw a straight line from Philly straight across, you'll hit most of these countries. So that's like it gets cold. It gets cold there.
It
And
did.
then I call him and it's 80 degrees down in Georgetown down there. And he's like can't relate.
Can't relate. I
Yeah.
know what you're talking about.
Yep.
And one thing that I learned on that trip to Africa was how big of a continent it is. You know,
Bro.
and
Yeah.
and I didn't realize how big of a continent it was. And
Hmm.
I think I heard someone say that you can fit every continent in the world into Africa.
Most of the world in Africa. Yeah.
Most of the world into Africa, and I had no
Hmm.
idea because they manipulate the size of the country on the map. I don't know if it's
Hmm.
to manipulate it just so that it could actually fit on the map, but
Hmm.
when you look at Africa, it looks smaller than
It looks like the
America.
same size as the United States.
You know what
Exactly.
I'm
Yeah.
saying? It
Hmm.
looks smaller, but
Yeah.
it's actually the U.S. could
Hmm.
fit in Africa,
Yeah.
a few
I,
times
I, I
over.
remember diving and doing some research about that too, where the people were saying, right, and of course, this is where people might split on some of these topics, but people have said that they've done this before, right, to kind of throw off your perception of how, like you said, of how big and how powerful Africa is and like what they really have to offer. But then where we are now, fast forward decades later, now we're seeing, okay, this is where everybody's going back to with investments, right, with different,
Yes,
long-term planning. Everybody is there,
yes,
right? And like we got to talk about that in a future episode because
hmm
international investments, international business is something that is definitely coming more across my radar, right? Like, like I said, I do business down in Guyana with my family already, and I want to continue to grow in these different areas. My dad has been doing business over in Africa ever since 2010 now, and these are different things that I'm seeing. I'm like, okay, wait, how is this going to change up, right? Like the financial future as more Americans start seeing money outside of their local economy, and they're like, wait, I can make money outside here too.
hmm
Let me go tap into that, right? And what should we do to kind of plan those things out? So I definitely want to talk about that with you too on a future episode, because that
yeah, yeah,
that could be a
because
whole nother half an hour,
yeah,
hour long, yeah, topic.
exactly. Because the, op-
Yeah.
the availability has never been quite what it is now. I mean,
Mm-hmm.
down to Zoom, down to FaceTime, down to
Yep.
Airbnb, But
Yep.
like you said, it's definitely a conversation for another time. But I mean,
Yeah.
the opportunity has never been greater for international investing, and I think that I think people are finally seeing, okay, the U.S. is established. It's how more modernized it can get more modernized. I mean, I
Yeah.
guess we can have silver buildings everywhere we go and
Hmm.
flying surfboards, but um,
Yeah.
but how more modernized can this country get? Not as much as this project that I can take on in Africa or in
Hmm.
DR or somewhere in South America, somewhere in
Yeah.
Asia. It's yeah,
Like real world, like everyday problems that people need
exactly,
solving.
exactly.
Yeah.
Like just
Hmm.
water supply,
Water, housing,
protection
regular.
against
Hmm.
landslides and
Flooding.
tsunamis.
Yeah. Hmm.
There's
Yeah.
so much that could be
Not
done.
trying to figure out the next like social media app, right? Like people here and you know, that we're doing here in
Exactly,
America.
exactly.
It's a completely different world of problems.
It really is. It really is.
So speaking of social media and those things, I like to end off the episode with a content rec, right? So I have something lined up. It's in line with a couple other content recs I've done before.
Mhm.
But did you have anything that you want to share with the audience yet, or you want me to go?
Yeah, no. I am really, really excited to watch the Compound and Friends. I watched the Compound and Friends with Josh Brown, downtown Josh Brown.
Okay.
He's a contributor on CNBC.
Mm-hmm.
He talks stocks and investments. This latest last week, they did an episode with Jim Cramer. So I am super pumped. They just released it last night, so I'm super pumped to sit down and listen to that and get their perspective on where the market is going, and just see what the conversation is all about. I always enjoy their show. So the Compound and Friend is I listen to a lot. EYL, of course, I
Mm-hmm.
listen to, um, and yeah, continue reading. Definitely continue reading. Read books.
Always.
Listen to your books. However it is that you can absorb the information out there. Education does not end at high school. Education does not end at college. Education is something that you should do for the rest of your life. You should keep educating yourself, keep building your knowledge. When I have conversation with these young adults and they're high school and that's it, and they're ready to join the workforce. Yeah, join the workforce if you want, but don't ever stretch your mind off to keep learning. I learn every single day. I try to learn
Mm-hmm.
something every single day. Read something, listen to something that's gonna, add some fruitfulness to my life and to my mind. And it's really, really important to continue to learn. And
Yeah.
be careful what you're absorbing. There's a lot of negative music out there. That everything you absorb plays a role in your life, whether you believe it or not. So if you're absorbing negative drill music and negative lyrics, and the lines verse to verse, and you're spinning it in
Yeah.
front of your kids, and
All
just
that stuff
just
that just leads to the overstimulation.
and
Yep. That. Yep.
overstimulation, the over negativity.
Mm-hmm.
I think more people need to listen to podcasts like this. Of course, the First Sip. Shout out to the First Sip, and um, other podcasts, and get an Audible account or go to your local library, get a free library card. They have Audible, some form of e-readers and or Audible, and yeah, just continue that education and absorb the good thing, the positive stuff.
I love it. I love it. And so for me, I'm gonna go ahead and stick to my usual content recs, which is usually either like a show or a movie over the last couple of weeks. Because this one, I'm a huge fan of Harlan Coben, and I don't know, maybe last time we had an episode, I might have talked about him, but he is huge when it comes to like mystery series, murder mysteries, all those kind of like thrillers that kind of have leave you with a weird twist at the end or with a cliffhanger that has you sitting there like, what just happened? And he just dropped a new show on Amazon Prime called Lazarus, and it's about a son who's a psychologist, and his father's also one, right? And his father actually gets, well, initially he thinks his father commits suicide, right? Because there's this note that's left that says, this isn't the end, and with this little image of a step stool on it. But then later he comes to find out that his father may have been murdered. And how does he find this out? Because he goes to his father's office to collect some things and to clear up, and he gets visited by one of his father's old patients. And she's there looking for him and saying, hey, I have an appointment with Dr. Laz, blah, 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 blah. And he's trying to explain to her, hey, unfortunately, blah, blah, blah. But she keeps cutting him off. So he can't even get the sentence out to say it. He sits down with her, goes through the conversation. And then she ends up leaving and then going back home, right? But she leaves something there. And then he's like, okay, I got to return this back to this girl and maybe ask her some more questions about what happened, and with my dad. He goes to the house to look for the girl. And this black guy opens the door and he says, sorry, sir, I don't know if you've heard, but she died 20 years ago.
Oh. Wow. Oh, so we got some ghost
And
play.
right. And he's looking at the guy. He says, that can't be. She was just with me yesterday. Right. I just sat down with her yesterday and had a full hour-long conversation. He was like, I don't know who you were talking to, but it wasn't Cassandra Stone. That's the girl's name. And from there, he starts getting visited by a few other people, right, who are all related to his father, but who are all also murdered over the last 20 years. And throughout the show, he tries to go through this, investigating now, working with the cops to try to figure out, and to make them not think that he's crazy, because he's like, yo, I have this information about how these people died, but I can't let you know that I'm seeing ghosts, right? So just trust the information I'm giving you, but don't ask me about how I'm getting the information. And it goes through, right, the whole series. It's about 7-8 episodes. But the way they end the series with who did the killing.
Oh.
Man,
You got me sold on the
man.
show.
I hope I sold that one pretty good, because
You
you guys
did.
gotta
I
watch
think
that
the
one.
audience is gonna definitely start
Yeah.
tuning in.
Lazarus on Amazon Prime. You guys gotta check that one out, because, man, like I said, that one, I was sitting here, I was like, no way. No way that just happened. No way it's that person. Didn't see that coming. But you guys let me know what you think. Man.
That sounds
David,
awesome.
we had another great episode.
I'll definitely take a look at that.
Let me know what you think if you check it out. But this was another great one. I hope that people enjoy this. I hope they get some good takeaway information, stuff that they can actually act on, which I definitely think they can. I think this was one of our best episodes. I think, like we said, we stayed true to what we were talking about before, right? Which is not diving too far into a whole bunch of jargon and stuff that maybe we could just banter about back and forth, but really making sure it hits home for the everyday, American right now, who is like, yo, help me save some money and make this make sense.
Yes.
Right. So I hope that people appreciate it. As you guys are listening to this, right, send us, messages, leave comments. If there's other things that you're listening to and you're saying, okay, well, I had questions about this, and you didn't talk about that, drop it in the comments, send us a text. If you have our numbers, drop us a DM, because, like I said, this is the first of a series, and David's going to be coming back on to continue to share this information so we can be fully prepared for the new year. So I want you guys to contribute and help us build this out. So, like I said, let me know anything you guys have in mind. But David, any final words for the people?
So do you want to kind of give them a little insight on what we're going to talk about next episode? Just that way they can have some interest. So, Dikembe and I would love to kind of dive into the conversation of entrepreneurship, the struggles, the do's, the don'ts, kind of how we each got started, and, where we want to go, and, tools that can help you, and just a fun conversation about entrepreneurship. I think not many people talk about the pain points and what it's like starting, and it's gonna be a fun one. I think it's gonna be our best conversation yet.
I'm definitely looking forward to that one, because that's another topic me and my dad are talking a lot about, is helping that beginning entrepreneur, the person who has their just foot in the door, or who is thinking about getting into it. Right. I was just talking to a friend about that the other day, who launched an idea that they were sitting on. And it's like, oh, it's actually starting to gain some attention. How do I formalize these things? Like you said, what are the do's? What are the don'ts? Where do I begin? Who do I pay attention to? Right? What are some things to tap into? And I can't wait for that episode, because it's definitely going to be a good one.
Yes, sir.
I know we got a lot to talk about. So, but I won't hold the people here any longer. David, thank you again for joining me for this episode.
Thank you.
I'm definitely looking forward to the rest of this series. I hope you guys continue to tune in, because, like I said, we're going to continue to bring you this information so we can continue to work towards that path of financial security, so we can get closer to being able to wake up, on a random Tuesday and just say, what do I want to do today?
Right.
Right. As you sit there and sip that cup of coffee.
That's right.
But until then, you guys stay tuned, stay curious, and as always, enjoy your first sip.